This is Jason and Chris from Hard Money Bankers. Welcome you back to the REI 360 show, episode number 28, I believe.
Number 28.
Number 28. Still going strong. As always, you could find us online, hashtag the REI 360 show or hardmoneybankers.com. Really cool topic today. Our topic's about black belt strategies that we have on the whiteboard, not the blackboard, I'm sorry. But black belt strategies related to operational and accounting back-end systems for real estate investors. I would say this is a little bit of a black belt / 201 strategy, but this is important if you're brand new to real estate investing or if you're an experienced real estate investor, because obviously the saying we always have is if you don't know where your cash is and you can't count your cash, you can't be in business.
For sure. This applies if you have one property or if you have 100. Straight up. You need to know your numbers.
That's
and
right.
Real estate investors are notoriously bad at this. And honestly, I think a big part of it is a CPA's fault. That might be a little controversial, but here's the thing. Having an accountant tell you how to track your cash in a real estate business is a big conflict of interest because their goals are different than yours. Their goals are to get inside QuickBooks or some kind of accounting software and have the right numbers to prepare an accurate tax return they can put their name on. Cool. I don't fault them for that at all. That's their job. But that is different than the property owner or the business owner's goals of properly tracking their cash and operations related to their real estate. Does that make sense?
Yeah, and I think many people will run into this if you haven't already, and you probably have, because you go to your CPA, say, I got to ask my CPA these questions, and they give you an answer, and you say, well, that doesn't make sense. Show me this report, and they can't supply that report because, most of the time, these reports don't exist for us business owners. We want to look at the bottom line. We want to look at the financial side of the business, not, what is my tax return going to say?
Yeah, for sure. And they'll run a balance sheet report for a property that is absolutely accurate in accounting world, and you won't have any idea what it means. You won't be able to make good managerial decisions related to your real estate business while looking at this report. And we have run smack into this topic this year as we've been more and more. Obviously, lending is our main thing, and that's what takes up the majority of our time is doing loans for real estate investors. But we buy properties too, and now it's getting busier, and it really, really deserves our attention.
Exactly, and this is pretty much freshly learned and implemented internally. We've always done. We've done over 1,000 loans, and we've always bought properties, onesies, twosies. But now that we're doing it on a massive level, we realize you have to do this. And this topic actually came up in our mastermind that we did in our office a few weeks ago, and the only people that were invited were guys that did 30 plus deals, and we had a lot of guys in that room that have done hundreds of deals, and most of them still had issues with this, and we actually had to take it outside of the residential industry and go and get referrals from the commercial industry because the commercial guys are doing this correctly.
They are, and we did a lot of research to find out their setup.
And what we're going to discuss right now are the two softwares that we use and what we believe are some of the only softwares that you really can use to do this properly. I'm glad we finally know this, and we're going to be able to share this as well because it's a straight game changer.
Absolute game changer. And first things first, I do not believe that QuickBooks is an acceptable solution for accounting for a real estate investing company. I don't. I know it's accurate for a CPA to prepare tax returns, but I don't think you can function properly as a business owner and make the right decisions with that software. And 99.9% of people in the business are using it. So here's what we came up with after doing all the research that Jason mentioned. Should I go through the breakdown a little bit?
Let's talk about the construction phase, which is also, if you're just flipping properties, you're only living in this.
Yeah, if you don't do rentals, this is the whole rental phase over here, and this is the construction phase. Our rentals have both sides to it because we're buying properties, fixing them up, and later on they become rentals. But if you're doing flips, that only applies to here. So after doing a lot of research, the right solution.
Flips.
Sure. The right solution, the most affordable one, and that could do it accurately, is Sage 100 with its own bank account. The most important piece of information, the most important financial data in your business is that you have a cash balance per property at all times. Bottom line. If you don't have that, if you can't look at a report right now and saying, I have X amount of cash, whether it's a rental or a flip per property, something's going really, really wrong. And that's what a lot of people have run into. So a flip will only exist over here in this bank account. It has its own bank account and its own software. It's one completely controlled environment. It could be its own company, right? And when a construction phase is done, either by reselling the property or refinancing it and moving it to the rental portfolio, everything has to zero out. Meaning if you go over budget by $5,000, you have to put $5,000 in there. Or if it's a flip and you just made $35,000, you take your $35,000 profit out and throw it in your operating account or wherever you like. So that's a very, very important part of it, that at the end of that phase, a construction, each property will zero.
Yeah, and the trap that most people fall into is they're eyeballing, or in the back of their head, they know what their construction costs are, but they don't actually know what they are on paper. And this puts, accountability in place. So you know exactly what it is, and
And exactly how much you have left at all times.
Exactly. And then another saying kind of in the accounting world is, your numbers are either right or they're wrong. You're not off by a penny, you're not off by $1. Like, it doesn't work. Every dollar has to be accounted for. So that's why Chris wrote at the bottom here that each property has to zero out. Either you made money or you lost money, but it gets to zero. It's not like, oh, I'm not sure exactly where this goes. So, and I know a lot of people in this space, and I would say probably that own a smaller portfolio of properties, they'll have different bank accounts, and they can organize
That's
that
one
way
to be accountable.
But in our world, we have one bank account, and then there's not sub accounts, but there's in our software we can track how much money is left on each property. So when, for instance, we say, we have $10,000 left on a property, but we have $20,000 worth of work, we have to make real life business decisions and say, what the heck are we going to do here?
We have to fill that hole with our own cash, and that's the way it goes. The one thing that you want to avoid doing that is so common is like, all right, we have a $60,000 budget for this job. We do the job, we get it done, we sell it. How much do we spend at the end? Instead of knowing how much you had left, oh shit, we spent $75,000.
That's right.
On a $60,000 job, and you cannot run a real estate business that way. And it is so common. It's common in the people we lend to and other people we know in the industry, and it really should be managed better, frankly. If you're going over budget, which does happen, we know, you have to be aware of that and plug the holes with your own cash and be responsible for that.
That's right. And because most people don't even know they're going over budget, that's the issue.
Yeah, because they don't see their cash balances.
Yeah. I mean, it's an easy thing.
problem.
It's an easy thing, especially for, we know guys that do 100 deals a year that they're going over budget on so many projects. Imagine if you're newer in this space.
Yep. All right. So let's talk about the rental side a little bit. I know that's just as popular in the real estate investing world as flips are. So for us, when it moves from the construction phase to the rental phase is because two things happen. The property is leased out and it's refinanced with a bank and our private loan is paid off. Okay, those two things.
Or long-term debt, anything that's in place that you're done with the construction side.
Right. So whatever your long-term financing setup is, and if you're buying in cash, for example, you wouldn't have the refi. You would just have it gets leased out.
Exactly.
Right? And then it moves over here. In the rental phase, we are using software called Yardi Genesis 2. If you come across Yardi Voyager, this probably doesn't apply to you. It's for big commercial companies or if you own like a couple thousand apartments. So don't be scared off if you say, oh, Yardi Voyager, it costs so much. There's a step down version that does apply to us and a lot of people like our company. So it's Yardi Genesis 2, also with its own bank account, still tracking cash balances per property. That's super important, right? Because at all times, it's our rent comes in and our expenses are going out. You have mortgage going out, you have property taxes every year, you have insurance, you have maintenance and upkeep, and you need to know those numbers per property. And hopefully every property is in the positive.
Yeah.
Maybe even throw in like a buffer, like a $500 or $1,000 per property, just to have a little, cushion there. And tracking those cash balances at all times is still the most important thing. It is not the most important thing to your CPA. It is the most important thing to you. So I know we said that 6 times here today, but that's because it's just so rampant, it's so common, and people haven't really broken it down. And that's what Jason and I have spent all summer doing, really, is getting the system and the software in line, and we're implementing it all now, and it's going to really, really be a game changer for us.
Yeah, I mean, most people we run across go from an Excel spreadsheet, and then they upgrade to like QuickBooks, and then they realize that it's such a pain in the neck, and they really just don't know what the numbers are. And then at the end of the year, they kind of just mold it all together, and they run some reports and they say, cool, I've got it. But they really have no idea on, property per property or even as a portfolio, like where they're at. And I think if you can, and this is pretty easy to implement, for the most part. I mean, the software,
manageable.
The software is pretty self-explanatory. Unfortunately, this software is server-based that you got to put on your computer. It's not web-based. This is web-based, Yardi. And there's a few other property management solutions as well. But from what we've found, and we've done a lot of homework on it, we've chatted with a lot of industry pros, and I think a lot of this started with, we're so surprised that like nobody knew it. Nobody knew the answer.
Nobody knew the answer.
And one answer.
We're asking the wrong people.
That's true, but it's also like an unacceptable answer to us when somebody says, well, I use QuickBooks, but then I take my folder out and I jot notes there, and then I do it here, and then I have this in Excel spreadsheet. It's like, that works if you're doing one deal, but other than that, it just doesn't. It doesn't work. You have to invest in it, and the software is a few $1,000s, but believe me when I tell you, it's worth it. And if you are concerned about your CPA, because obviously we're not giving you any legal or tax advice, but if you are concerned, get with your CPA and explain to him your goals. I'm a businessman, I'm a finance guy. That's what I want to see. Explain to him the reasoning behind why Sage is so much better than QuickBooks, and other things, and work as a team, because we did involve our CPA as well, and
our CPA, our whole team.
Exactly, but we made it very clear, like, his goals and our goals are very different, and there's a major problem if you can't tell me how much construction money I have left in a project.
Absolutely, that's a huge
or how much money we made on a flip.
And yeah, on that note, there's another big advantage and a big upgrade that comes in your business from getting this all in line, is that the cash makes everyone more accountable. The cash makes everyone better at their job because you're looking at the right stuff. Your contractors or project managers, GC, however your jobs are set up, are going to be much, much more accountable when you are relaying to them, okay, we have 12,000 left, okay, we have 8,000 left. Get it, get it in on budget. And tracking that all along using weekly meetings and everything else, same on the property management side. Tracking those financial numbers like a pro is going to make your whole operation better and more profitable.
Exactly. Cool. Until next time, REI 360 show, Hard Money Bankers. You can reach us online, hardmoneybankers.com, lending money in Maryland, Virginia, DC, Pennsylvania, and New Jersey, so holler at us for that. We'll take care. Check you later.